Thanks for joining us, everyone, for the Muck Wrap for Tuesday, the 21st of July. Jack, let's kick it off with the overnight developments. More conflict coming out of the Middle East and potential blockages out of the Strait of Hormuz. What's happening there?
Yeah, so conflicts continued for a 10th straight day between the US and Iran. Doesn't show any signs of abating soon. The latest development is that Iranian-backed Houthi rebels, sort of based in Yemen, are now imposing a blockade on Saudi Arabia through the Red Sea, which is another channel for commodities to flow through. So again, that's going to have an impact on global supplies. So far, oil has actually been reasonably flat yesterday, still at elevated levels, but we'll see what this latest blockade, the impact it has moving forward.
And okay, cool, thanks. And Trump is now touting 50% tariffs on Canadian goods. Is this just another headline for him now that the World Cup's over and he needs something to kind of get him back in the spotlight, or like how realistic is this actually going to be?
Yeah, I mean, we've seen throughout Trump's tenure, the taco trade was sort of popularised, which is Trump always chickens out. It's looking like this is probably another one of those. 50% is incredibly high, especially for a neighbouring country, one of their biggest trade partners. So it's a tough day for Canada. They had soft CPI release, which already put pressure on the Loonie, and then coupled this with a huge tariff with a big trading partner. The Canadian dollar had a poor day yesterday.
Yeah, and obviously Canada is obviously a net exporter to the US for oil. Oil prices rising. Doesn't take a genius to see that he's trying to talk their currency down so they can make it a bit cheaper for themselves. Now, new PM in the UK, Andy Burnham, looks to have spooked markets already. Are we looking at another Liz Truss style moment of massive yield jumping?
Yeah, there's definitely a few ghosts of the past rising up from the new PM coming into power. Last year, he made some comments that spooked markets around trying to untie themselves to bonds and not be so dictated. The markets didn't react favourably to that, and that was only when he was a local mayor. Now he's Prime Minister. Markets were hoping he would continue his stance of where he was trying to unwind those comments and not be as reactive, and markets were hoping he'd be responsible with his fiscal policy moving forward. He's just been sworn in, made his first speech yesterday, and stated he'd seek to find any flexibility within his powers. Markets have basically interpreted that as he's got to be loose with his spending. Liz Truss famously went into power a few years ago, lasted 45 odd days because she basically started spending all this money. No one knew how they were going to pay for it, and the UK economy tanked for a while. So the markets have sort of got that in the back of their mind. So any spending news makes them nervous. So sterling took a hit yesterday, and their bonds took a hit.
Definitely a very interesting one to watch coming forward. New Zealand inflation data has just come out, slight beat. What are we expecting with that? 1.5 versus 1.4 expected, I think, was for the core.
So obviously, we were expecting New Zealand inflation to rise a fair bit. So the headline, we're looking for a big jump in that. Any beat in the inflation like we just had is going to be Kiwi supportive, because that'll sort of help support the hawkish bias that the RBNZ has been holding. So expect to see the Kiwi getting a slight bump this morning.
Yeah, it's up about 10 points already. Aussie Kiwi probably won't have too much of a pullback, like it was looking to anyway now because of that. So watch that space as well. UK unemployment coming up today. What are we expecting for that?
We're expecting a slight tick up, 10 basis points from 4.9 to 5% in the unemployment. Any rise in that is going to be bearish for the sterling. So if it comes out slightly above that 5%, the sterling's going to take another hit. So it's got to be a big couple of days for the pound to see how it all shakes out and how the market sort of paints the UK picture now that the new regime is in place.
And the movers for the day, mate. What are we looking at? Pound, obviously.
Yeah, so off the back of the new PM coming into power yesterday and his comments, we can see the market reaction to that. The sterling struggling, US dollar is maintaining its strength thanks to its safe haven status with all the geopolitical tension at the moment.
Yeah, it's had a pretty resilient economy, but kind of any down day like that, it's probably quite significant at this point. So definitely interesting. Dollar CAD, obviously soft on the CAD side.
As we spoke, two main factors, the new tariff being touted, whether it actually happens or not, the market doesn't really care. They just react to the news. And then also the soft inflation data, which will put a strain on the potential hawkish bias the BOC's had, although they've been holding rates for a long time. So the market's probably more expecting them to lower than hike, if anything, in the future.
And S&P looks like it's trickling down as well.
Yeah, so just with the raised tensions, there was no major catalyst over the last day or so. It's just the raised conflict in the Middle East, which is really weighing on investors at the moment. The AI jitters from last week have subsided a little bit, although news out of China is that there's a new AI model to rival Anthropic's Fable, and they're supposedly able to do that at a 40% cheaper cost. So that's really going to put pressure on the US big AI companies, how they can combat these cheaper models out of China, which are allegedly running at the same computing power.
And the vol, Bitcoin, looking to be a bit choppy these days. What's going on with that? Is that just flows, or is there
there was no major news yesterday. I think it's just flows. Medium holders of Bitcoin, the sort of 100 to 1,000 coin wallets, have been rotating out of the crypto, whereas the big whales that are holding over 1,000 coins are sort of starting to buy it up. But I think as a whole, the crypto flows have sort of been easing off compared to what they were last year. So any of these movements are having a bit more of a volatile impact. Michael Saylor's strategy has also not bought any coins for the last couple of weeks. Obviously, they're one of the world's biggest holders, so that's also impacting the sentiment around the crypto.
Cool, thanks. And the chart of the day today, dollar yen looks. Is it looking to break out? Do you think? What's not financial advice, obviously. But,
None of this is investment advice. All investments carry risk. So we just haven't looked at the US yen for a while. It's still sitting at 4-decade highs, so we haven't seen the pair this high since the 80s. We've talked previously about the 160 mark, which is that blue line, as the historical point where the Bank of Japan looks to strengthen and support the yen through manual intervention. They were doing that early in the year, which you can see is the red dips, but recent months they haven't done that, and they've tried to change tact and not broadcast their moves to the market to sort of keep it guessing, so people can't sort of front run these potential interventions. So traders are now expecting that line in the sand to move from 160 up to 162, but we can see the chart pattern indicates a bullish pennant. So after the rises this year, it's now consolidating into that sort of flag pattern we can see with those magenta lines. What this traditionally indicates from a technical perspective is that a breakout is going to come and will come in the same direction as the flagpole, which in this case is bullish. So we've kind of got two competing on the technical side, looking at a potential breakout. On a fundamental side, will the BOJ actually allow that, or will they step in to strengthen the yen?
It'll be very interesting to see if that breaks and if they actually give traders a whack off the back of that. So, article of the day, sorry, Andy Burnham and his comments, which will be quite an interesting read actually. So that should be quite cool. Definitely recommend everyone have a look at that. And questions, anyone?
Thanks, guys.
Cool.
Thanks. Thank you.